She's got legs, and she knows how to use them. She's got legs, and they're matching all the time. It's leg day, guys. Let's get into some matching legs. Let's see what we can find here. Now, whenever I look for matching legs, I like to find a median. So in this technique, it's the novel wave is the wave that comes off. It's like the first leg in a new trend. And then you have a median, or that's like the middle of the wave. And then you have the target. So currently, I'm treating this as the median. So my expectation has been that this leg matches this leg. You have an ABC in the middle. And then off the median, you have a sharp pump up. And backtest and just mimic this leg. So that is the conservative way to look at this. And then you have a 1, 2, 3, 4, 5 as per the Elliott wave system, getting you to a buck 20, something like that. There are other ways to look at this, though. Much more bullish ways to look at it. It's not as conservative. They are extravagant targets, but this would be the median. And what's coming off of that is this leg to there. Then this chop. Then another push. That's your 175,000 to 180,000 target by January, February, if I had to guess. Then repeat this consolidation up here before a final push to 300. So that would be an ultra bullish way of looking at this, and that would fit with a normal Bitcoin cycle, because this took 6 months to go sideways. This also took 6 months. So maybe you have 3 of these consolidations. That would get you an October, maybe November, end of 2025 peak. But the majority of 2025, you'd go sideways probably after February. Yeah, you'd have 6 months of sideways and then one final push for maybe 3 months up into November maybe. And then you do a standard Bitcoin cycle. The thing about these is invalidating them, because this push-up is close to matching this push-up. This gets up to 115. If this push-up is matching this one, you should top out at 105. So currently at the moment, they both match. This matches that just the same as this leg is currently matching that. This one should push a little bit higher. What you would probably want to see for the more bullish wave is more pushing up to maybe 100, 115, something like that. Then this leg down will be your December cycle low. And then you spend December kind of chopping upwards, January and into February up. But as it stands right now, both patterns still match. The conservative target at being 120, bullish target being 150 to 175 or so. Really just depends on how bullish this cycle will be. If it's not a bullish cycle, then you could still zoom out to the weekly chart and look at the trend. We're still closing a higher high than the 2021 high, making a buy the dip scenario if price was to get down here. So if this is 1, 2, 3, 4, 5, then this becomes your buy zone. Potentially, that would be a really deep retrace. Potentially it just gets to 30. Maybe it takes this liquidity down below and gets people really bearish. We'll see what we get. We got to top out first. So we'll come back to the daily chart here, see what we're looking at, and see how price is pushing. Now in this current leg up, I was expecting this price action to repeat up here. this doesn't look the same as that. So it's possible that this is the median and the target is way higher. And you really never know, but I would measure closing price to that closing price and project from the low closing price, getting you a target of 115 to 124 before this thing even pulls back for a small leg back. Let's draw that out and see what it would look like. So in this idea, this is your median, and then what you had was 3 waves there, and you would have 3 waves there, and that would happen very, very quickly. It would probably get there by the end of the month, if I had to guess. So you might have a little grinding up here, maybe at 100,000, like just projecting this leg up to 100,000, and then this is your weekend price action, just slowly grinding through 100, and then pop up, and that completes that leg. And then this leg repeats, finding 100 as support, maybe, and then further pushing into 2025, into February or something like that. And that's possible as long as the daily is closing higher highs and higher lows. And right now, you've got a high here, higher low here. Your higher high hasn't been put in yet, so this higher high can be all the way up here. Could be up here. That'll be your higher high. So then that's that much higher than that, then this is the area you buy. 98 might just wick down past 100 and then back up. I mean, pay attention to the daily trend, because your next higher low currently would be right here, based on how much higher that one is. It'd be right under this liquidity. If that does come, price has to come down there, and then you make a little uptrend coming out of there. Then the target would be this wave up. Draw that in a different color here. Could be that wave up, something like that. And maybe up to 114 or something like that before pulling back again. So like an Elliott wave theory, something like that would look like a wave 1. This is your wave 2. This is your wave 3. This is your wave 4. And then you get that extended wave 5 in the third. For the 1, 2, this will be 3, and you get your wave 4, choppy chop, and then up for 5. Something like that. And that's probably just a wave 3. And that wave 5 could extend even further. It could really get crazy. You're in price discovery. You really don't know where it's going to stop until it stops. And the only way I can really give direction on that is trend. Like Elliott wave is cool and all, but it really needs to follow the trend. Your counts need to be in the direction of the trend. That's why I kind of stick more specific to what matches what looks like it's, lining up with another algorithm, another formation that an algorithm did to give me a higher probability. But let's go down to the 4-hour and see what we see on the 4-hour here. So this grindy price action didn't repeat here so much, and you could kind of say that matches, and you just got one more leg up. This could have been that leg. Yeah, you'd have to match this little thing with that. Yeah, that could be a completed move. I'm not so convinced on it. I'm definitely open to the possibility of going higher because we still have higher highs and higher lows. Notice how the market wicked down right there, and the 4-hour still closed up higher. It did not want to close lower than that just yet. If it does close lower than that, then I'm open to selling the lower high if it does come, and then look for a larger correction down to maybe 80K, and that other leg would repeat. This leg would repeat down from current area if that was to occur. Currently, we do have a leg right down there that does match what we've got going on. So maybe you do get a lower high there and start pushing down. It might be time for that correction. As long as the CME is open, they may just have to buy. They may still be closing their short positions, unwinding them. And if they are, that just adds more fuel. You got to think each one of these Bitcoins now costs $90,000. So you definitely need big money to really unwind those positions to really get the price moving up there. Um, I mean, anybody in the markets looks at it and says, wow, that's expensive. And they don't want to buy it. But you have forced buyers. So let's measure this on a 4-hour basis. We'll measure this leg down from our current 4-hour high close. So if price does come down, my buy zone is 86 to 84, most likely 84,300 here. Take that liquidity, just tap them out if it does want to come down there. Invalidation is 82,146. Any 4-hour closure below that, and that pattern is no longer valid. You'd have to look for something else. But I'm not yet entertaining that pattern to play until I get a 4-hour lower low close. Sell the lower high and likely push into that, into the 18th or something like that. Somewhere around there would be somewhere to look for if that pattern does play. Again, invalidation is a 4-hour closure beyond 82. I don't want to see a 4-hour closure beyond that. I'd like to see the 4-hour closures remain above 84. 4-hour closures above 84, it's still in a higher high, higher low scenario for another push up. But if you look locally here on the 4-hour, you're still in a 4-hour higher high and potentially higher low right here scenario. And that could lead to this being your median, and you're about to repeat this. I don't make the rules, I just follow along. They tell me to stay long here until they close the 4-hour lower low than this current swing low. So they could pop the high, then close down there, then you sell the lower high and look for the correction down. But maintaining the higher highs, higher lows allows for that alignment trade from the other video where the trends are all aligned upwards, and it really makes for the fastest horse. You could really keep running. But let's look on maybe a 1-hour chart and see if we could see a trend. All right, 1 hour. Let's match some legs. 3 wave there. We got 3 waves there. Matches with that. Let's actually come to the 1-to-1, still maintaining the trend. Looks pretty decent. So if this is to match this, we likely don't go below that wick. If we do, we're looking at all this liquidity here. And I've seen these bullish patterns before, where they come back into the median of the consolidation. And once that high is broken there, it really does move higher. I wouldn't necessarily say take the breakout trade there, because this can just come right back down, back test that again, or break it, and then back test that for a move lower. So then how to enter? Well, I'll just put my stop loss there. Any break below that, we're likely going after these liquidities, and the pattern can be this leg somehow matching this, expecting this to pop up for 3, come up to this sell setup here, and pop back down, maybe twice, similar to what this did over here. It popped twice, and that might be your final buy setup after taking this local liquidity right there. Stop loss goes at the low, and see if you get this repeating, and it can go really high. Take some profits at the top here. There's liquidity up there, so that's always a take profit. Even on these buy setups, I take my profit. And say that buy setup plays out. Where is price heading? Let's get a trend-based fib extension, take a measurement. Maybe it does this leg, repeats this leg from right there. Measured on closing price. Get you a target of 95 to 98. And if price hovers up there, you may repeat this grinding price action. You may see that up here. And then price just continues to push. And this is getting above 100K, this matching leg right there before consolidating again. And then maybe this consolidation here is a consolidation above 100K before a push to 115. Now, these are very bullish ideas. I don't know if they play. Eventually, these buy setups are going to fail. We've had a lot of good ones moving up, but eventually your stop loss should get hit and you should be taken out of anything you added on. If you're in from lower, say you took these buy setups down here or anywhere around here, you could trim a little bit on them, but anything that you're adding above, I'd say probably anything above 80, you should be having a very tight stop loss on anything you're adding and just see where the trend goes, see if it just continues. Anytime that I'm adding in an uptrend like that, as soon as it breaks a level, as soon as it breaks a high, I'm taking some profit off of there, and then I let the rest run. Like this trade idea right here, it'll break the high here, I'll close half of it and let the other half run, if it decides to run. Now the trend is actually fairly extended. It can extend further, no doubt. But until I get that leg similar to that and price holds up there at 98 and is not rejecting real hard, then I'm expecting this grinding thing, and I may just add it back on to go for the 100K and then above. But price could reject pretty hard. You could have front runners front running the 99, 98K maybe, or people just trying to short it up there and they'll get squeezed and it'll just keep pushing through. So pay attention to trend. As soon as this trend starts aligning, you have a low here on the 1 hour. You had a higher high and now a lower low close. So that's pretty down there. This is probably where you would find a 1 hour lower high. There is liquidity up here. There's a fair value gap up here. That's probably where price is going. If I had to guess, probably 92 before coming back down for this liquidity. So that would, in Elliott wave terms, look like a wave 1, 2, 3, 4, 5 rejection. Feel free to sell that if you want to. Stop loss will go at the high. I think that one is engineered to look that way. It should look like a 3-wave pullback, push down, like it's trying to fight down and then pop the high. But yeah, that is definitely an Elliott wave trade setup. 1, 2, 3, 4, 5 down, 3-wave pullback, and target these lows. That is valid. I'm trading in the upwards direction only because the 4 hour says higher highs and higher lows. So as soon as the 4 hour closes a lower low, I'm expecting a larger correction and look for a buy setup lower, probably around that 83 area that I mentioned earlier, 82, 83. Is that where it was? Well, rewind it and find out what it was. Yeah, so there's my stop loss right at today's low. See if that holds. If not, look for this liquidity to be taken and look for these buy setups down here at around 82 to 84. Let's see if you get a push up. Hope that was helpful. Yeah, this is how you keep the stop tight right there. Have a good night.